Hey everybody, welcome back to the channel. Today we're back with the Dividend News You Can Use series, a weekly quick summary of the market and dividend news so that you can get the info you need and move on with your week. No fluff, just the dividend news in 10 minutes or less. So let's go. All right, overall the market last week ended in a positive note with the S&P 500, the NASDAQ, and the Dow all up for the week. As you can see by the chart, it was a quite volatile week, with a Thursday starting off pretty strong and then ending up very low. But then Friday rebounded strongly. The S&P 500 ended up basically 1%. The NASDAQ was up almost 2%, and Dow was up 0.63%. Overall, an excellent week in the market. Some notable dividend stocks and funds for the week. As always, we're going to talk through SCHD at plus 0.88, DGRO at plus 0.32%, VYM at plus 0.55%, NOBL at 0.34%, and VNQ had a negative week, a negative 1.71. Individual companies had quite the mix of wins and losses this week. AbbVie up another almost 5%, and that's on top of 5.68% last week. So congratulations to all the AbbVie shareholders. We have quite an exceptional couple weeks here. Intel had positive earnings this week, and their stock went up 8.26% for the week. T. Rowe Price also did extremely well at 5.92%. RTX had some struggles this week, which we'll talk about later, but they ended up the week down negative 9.39%. Microsoft, one of the large tech companies that isn't doing hot right now, is down another 1.57% for the week. Ford reported earnings and went down 4.81%. Bristol Myers Squibb, BMY, is down 5.06%. And one of my favorite stocks, NextEra Energy Partners, ticker NEP, was down 7.94%. So you know I had to add more shares this week on that company. Overall, looking at the sectors, we had quite a mixed result for the week, with communication services leading the way across the board. Also, consumer discretion and consumer staples did well. Energy had a positive week, as well as materials. Negatives were financials, healthcare, real estate, and utilities. The increase in interest rates with the Federal Reserve caused some of our more debt-dependent companies to have a struggle this week as well, specifically the real estate and utility sector. Overall, investor sentiment has come down a tiny bit, but it's still in the extreme greed category. It's at 78, and last week it was at 82. So we are seeing some pullback, but it's still in a very extreme greed mindset. And market valuations are still similar to previous weeks, with the S&P 500 at 19.7, the mid caps, the 400s at 14.4, and the small caps at 14.2. So again, mid caps and small caps are still where the value is. And the larger companies, S&P 500, are holding strong with their valuations for now. All right, economic data for this week. Upcoming week is really all about employment numbers. So on Tuesday, we have our job openings for June. Previous was 9.8 million, so we'll see how we're looking this month. ADP reports the employment for July on August 2nd. The estimate is for 173,000 new jobs. Initial jobless claims comes in on Thursday at a forecast of 227,000. And Friday, we have our U.S. non-farm payrolls for July, as well as our U.S. unemployment rate for July. So the market might go up and down depending on the results of these reports and how they compare to the forecasts. All right, so dividend stocks in the news. The big one for all our dividend investors is Johnson & Johnson. As I reported last week, they announced that they're going to be spinning off their Kenvue shares, which is the consumer staples division of Johnson & Johnson. If you remember, they IPO'd last year, and now Johnson & Johnson is finally spinning off the individual shares of that company that they still own. So some more details came out this week, and so anytime between July 24th and August 17th, existing shareholders can exchange their current J&J shares for shares of the new company, Kenvue, KVUE. So what you'll get if you decide to take them up on this exchange offer is $107.53 worth of KVU shares for every $100 of Johnson & Johnson shares that you turn in. Now, this is not a requirement. You do have the choice of exchanging all, some, or none of your shares. If you choose to not give away any of your shares, you'll continue to own Johnson & Johnson and no action will be needed. But if you do want to have more exposure to Kenvue itself, you could exchange some of your current Johnson & Johnson shares for Kenvue shares at a rate of $107.53 for every $100 you exchange. For those who don't want to do anything, we do have the ability to still get some Kenvue shares. So after they're done with the exchange offer, if they have not exchanged all 80.1% of the shares they're trying to exchange, existing Johnson & Johnson shareholders will receive the extra KVU shares as a special dividend 7 business days after the exchange period is over, which I'm estimating to be a payout of around August 25th to the 28th. So this is directly from the J&J Investor Relations shareholder site. So it is the most recent and up-to-date information. Personally, I am not going to be exchanging my shares for Kenvue. I'm going to continue to hold my Johnson & Johnson shares, which will be the pharmaceutical and the med tech divisions of Johnson & Johnson, which are expected to be the higher growth companies. If I do get some Kenvue shares as part of the special dividend, I will likely sell those off and use that money to buy other investments. The other dividend stock in the news this week was Raytheon, RTX. So they reported positive earnings, but they did disclose that some of their engines on their Pratt & Whitney division were having some issues and had to have a recall, if you will. So they were determined that there was a rare condition in the powder metal used to manufacture certain engines, and they will require them to ground those fleets and make the repairs. So they're going to be required to do inspections and removals of about 1,200 different engines over the next 9 to 12 months, including approximately 200 by this mid-September of this year. That comes out of a total of about 3,000 engines that had that problem. The CEO announced that it will take about 60 days for each engine to be updated, so it will be some downtime for the planes associated with these engines. Because of this recall, the company has reduced their free cash flow estimate for 2023 downward about $500 million to 4.8 billion total. So in the grand scheme of things, not a lot of money, but it is still something that's going to weigh on the RTX shares, as we saw this week with an almost 10% decline. All right, so we are right in the middle of the earnings season. So we did have quite a few report last week. I wasn't able to list them all here, but here are some of the highlights. As you can see, quite a lot of companies, very well-known companies, reported last week. So feel free to pause the screen and take a look at the ones they reported. Hopefully everyone received positive news on their companies for the week. All right, so here's some more from last week. As I said, there's quite a lot. The ones on the right-hand column of this page are the ones that actually missed their estimates. All the other ones listed here beat their estimates. And per FactSet, 51% of the S&P 500 companies have reported already, and 80% have beaten their earnings per share estimates, and 64% have beaten the revenue estimates. So overall, very good results so far in this earnings season. Again, we are halfway done, so we will see how the companies report over the next few weeks to see what that final number comes in at. But an 80% beat their estimates. That's excellent so far. All right, so this coming week, as I mentioned, there's more earnings coming up, and here is a highlight of some of the more common dividend companies that are reporting. So on Monday, we have Avalon Bay and Leggett & Platt. On Tuesday, we have Merck, Pfizer, Caterpillar, Starbucks, Altria, Illinois Toolworks, Marriott Hotels, Ecolab, Aflac, Prudential, Agri Realty, and Clearway Energy. On Wednesday, we have Qualcomm, CVS, Enterprise Product Partners, MetLife, Kraft Heinz, Realty Income, Simon Property Group, Clorox, Omega Healthcare, UGI Corp, and Scotts Miracle-Gro. On Thursday, the big day, we have Apple, Amgen, Gilead, Southern Company, Air Products and Chemicals, Cummins, Kellogg's, Iron Mountain, Pinnacle West, Hasbro, and Apple Hospitality. And on Friday, we round up with Enbridge, PPL Corp, Lyondell Basel, and Brookfield Renewable, one of my favorite renewable energy companies. So hopefully everyone has good results this week with your companies. Make sure you're keeping up to date with all your companies, and I'll be reporting on the results next week during this review. All right, so another really positive thing that dividend investors are always looking for is the dividend increases. So we have quite a few dividend increases announced this week. My number one renewable energy company, NextEra Energy Partners, raised their dividend. Cintas raised it 17.39%, which is huge. Wells Fargo at 16.67%. Canadian National Rail at 2.76% increase. Hershey's coming strong at 15.06%. Rio Tinto at an amazing 60.91% increase. Republic Services, what a trash company, 8.08% increase. Stanley Black & Decker with a small 1.25% increase. Clorox again with a small 1.69% increase. Shell coming in strong at 15.13. Canadian Pacific Kansas City at 1.91. Mondelez at 10.39. Kellogg with another penny raise, $1 at 1.69%, and Arbor Realty Trust at plus 2.38%. So I've seen on a lot of people on Twitter, I've really enjoyed owning Arbor Realty Trust. I don't personally own it, but congratulations to all the shareholders there. All right, upcoming ex-dividend dates for this week, some highlights. Again, you do have to own the shares before the dates listed here in order to get this next quarterly dividend. So on the 31st, we have Hasbro, Casey General Stores, P&W, Realty Income, and Ally Financial. On the 1st, we have Citizens Financial and IDACORP. On the 2nd, we have Valero Energy and KB Home. On the 3rd, we have Norfolk Southern, Wells Fargo, Activision Blizzard, Levi Strauss, and NextEra Energy Partners. And rounding off on Friday, we have Capital One Financial, Citigroup, D.R. Horton, Ameriprise Financial, and U.S. Steel. So if you're looking to take advantage of these upcoming dividends, make sure you own the shares before these dates. And our undervalued stock of the week is WP Carey. It's a triple net lease real estate company that operates here in the United States as well as in Europe. They have about 1,500 properties worldwide. They've been around for 50 years and have a very solid track record. And it does appear that they're undervalued at this time. With the metrics shown here, the current yield is 6.28%, and the 5-year historical yield is 5.59, which shows them approximately 12% undervalued based on those metrics. Also, the current price of WP Carey, which the ticker is WPC, the current price is $68.13, and the analyst 1-year estimate is $79.78, which shows it about a 17.09% upside. So if you're interested in this triple net lease real estate company, this might be a good time to do some research and take a look. Now, a new feature for this week is I'm going to start listing out my buy plan for the week. As I reported in a previous video, I do have a set agenda or a buy plan for the entire year. And so based on that plan, which I'll link in the pinned comment below, I'm going to be buying JEPI, UTG, BST, and SCHD this week in my personal portfolio. So thank you for watching. I really appreciate your time. Please like and subscribe if you haven't already. Please share with your friends. It really does help grow the channel. Please visit our website at dividendstockpile.com and reach out to me on any of the socials. I'm on Twitter and Threads. Thank you again. Have a great week.